Good morning, everyone, and thank you for joining us again on Morning Markets from the team at True Potential. Today we'll focus in on politics and the impact that that's been having on asset prices over the past 24 hours. So in a contrasting day for equity markets really yesterday, between what we saw in Europe and then the performance that we subsequently saw in the US. First, looking at Europe, we saw Europe continue to build on the positive momentum that had come through from Asia earlier in the day. The broad Euro Stoxx 600 index up 0.3%, in no small part helped by the German index, which was up about 0.5% on the day, helped by some strong trade data there, and I'll come on and just mention that a little bit later. I think the other thing that did help Europe yesterday was agreement having been reached with Poland and Hungary around the EU budget, and that's important because that will then allow for the release of the additional facilities there in terms of the COVID-19 response and the recovery programme. So that was an important aspect to move on from. And again, in Europe today, we have the ECB meeting where, as we touched on yesterday, further asset purchases are expected, and we'll get details of that around lunchtime. In the US equity market really yesterday then, it was very much a tale of a number of competing forces working at work. And the first one of those was just the rising infection rates in the US and more restrictive measures that we continue to be seeing enacted at various different state levels, which will undoubtedly have some impact on economic activity, although as we have seen over the past number of months, the impact maybe hasn't been as severe as one might have initially expected. The other 2 points to focus in on is just the ongoing back and forth really in Congress, the House of Representatives, on bringing forward some form of fiscal support package, which, as we've discussed, is important as a number of current measures do roll off at the end of the year. But it just looks as if we get close to agreement and then something else comes into the mix and the two sides move quite far apart again. So that's something that's there, but it is a bit unsettling, I think, for markets at this point in time. No doubt as we get past that and into the new year, it's likely that we will see a support package being passed given the change in administration, etc. The other factor that did influence US markets, in particular the technology market, where over the course of the day we saw the S&P 500 fall about 0.8%. Contrast that with the Nasdaq, which was down close to 2% on the day. And the weakness of Nasdaq was very much driven by a piece of legislation or a charge effectively against Facebook, where the US our authorities are charging them with antitrust issues in relation to a number of acquisitions that they made in 2012 and 2014, that being Instagram and then WhatsApp. So the remedy that's being sought there is to effectively try to break up Facebook. Now, clearly that's a very long time away, if ever, as a result of this, but it just shows and highlights the regulatory risk that's inherent in some of these businesses and the issues that they could face going forward. So that's something that clearly the market focused in on and will continue to focus on as we move forward. Another day in currency markets, another day of volatility for sterling. We nearly got back actually to the highs that we'd seen earlier in the week, and then subsequently did come off a little bit. What do we know? What's changed? Probably not very much, in the sense that Boris Johnson had his discussion with the EU president last night. Talks will resume. We hope to get to a firm conclusion, I think is the words that have been used, by Sunday, and then a decision will be taken as to what the direction of travel is. So another few days for us to see currency volatility and speculation that will impact asset prices as we go through. On the economic front yesterday, I just wanted to touch in on Germany. Exports, they did increase 0.8% from October, so further month-on-month improvement. Still, if we look at that in the context of where we were last year, exports are down some 11%. But it was just the composition of that I thought interesting, with China becoming the second most important trading partner from an export perspective for Germany. So that industrial recovery that we've seen in China having a key impact on the recovery that we're seeing in Germany as well. So the US and China, the two dominant export markets for German goods and components at this point in time. Just then in the UK this morning, we've had manufacturing and economic data. GDP for October increased 0.4% month on month. That's quite a slowdown from where we were in September at 1.1%. So just showing the impact of the restriction measures as they ramped up. But also clearly we've got the November lockdown impact to come through. So a relatively anemic forecast for GDP growth for the fourth quarter, very likely. We'll see that in coming through over the coming weeks, and we'll report back on how that evolves. But clearly we can think about manufacturing doing okay, industrial production doing okay, but really the services side of the economy being the challenge. That's it for today. Please do join us again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.